Yep. Hey, so we're live. Great. Hi
We're
guys.
live.
Nicola here.
Yay. Hi.
We are live, yes. We've got a great live stream for you here today. So we would love for you to give us a thumbs up to start off with. Let us know you're here. Post a comment. As you know, we are a new channel and we really appreciate that for the YouTube algorithm. So our tutorials get out there. If you are new to our channel, we are all about giving tutorials on technical analysis, scenario trading, as in what scenarios affect price action, so you can become a better and more profitable trader. And of course, the most important piece, which is the psychology and the mindset. So we do a little bit of all of that in our live streams every Wednesday. And we're going to be doing market analysis, Bitcoin, Ethereum, XRP. And Teresa, do you want to tell us a bit about the tutorial you've got planned for us today as well?
Yeah, we've been getting a lot of questions from people around like, where do I place my stop loss and how do I do good risk management? And one of the things I'm seeing a lot of traders is traders don't understand the importance of leverage and risk management, and that higher leverage doesn't necessarily make you more money. I think that's the biggest myth in trading, is that we've all bought in, we've all drunk the Kool-Aid and we think higher leverage makes more money. So I'm going to walk through a scenario example to show how do you understand which leverage to use to make the most money. And I think this is going to be part of an ongoing conversation. I'm actually working on a little spreadsheet, like a cheat sheet for you guys, so you can understand based on where you need your stop loss, what leverage you should be choosing. But I want to test out the cheat sheet for a few weeks first. But I'll give the basic explanation today, and then we'll see what your questions are, and we'll keep answering the questions as they come.
Yeah, so we're going to do a little bit of Bitcoin analysis first, what's happening on the charts, and then we'll go into the leverage trading tutorial. Then we will do Ethereum and XRP and some mindset in there as well. So we are at Bitcoin on the weekly. And was it yesterday morning? It was yesterday morning, right? We came down and we created a lower low. We didn't create a double bottom, which is what I was kind of hoping for, because that would put us out of our misery. But in terms of, are we going down to lower numbers? But when you zoom out on the weekly, you'll see we've got significant support at 28,500-ish. Significant support here at 31,000. We haven't got much going on in here, right? Much trading going on in here. It's all trading above it. So I'm looking at this and I'm just going, I don't get that we're going lower. We could come back down and create a higher low right now, or even come back down and create a double bottom on any one of these. But Teresa, could you argue we have our double bottom, this candle here and this candle here, albeit it's
you can argue anything.
I don't know. So anyways.
Can't argue anything. But yeah, I think the reality is the jury's out right now. We don't know which way it's going. If it does break the lower major support level, though, there are no major support levels all the way down to 24,000. So if we do break that with a daily candle, and I don't just mean a wick down, because a wick down, I hate to tell you guys, but it doesn't always count, right? And if you look at like the 4-hour or the daily, everything that's just happened in the last 24 hours is just a wick, right? So you don't want to pay too much attention to the wicks on the long-term horizon. So right now, what we just had was a huge big wick. So do I think we're going down to 24? I'd say the jury's out. I think it's a lot more likely that we're about to head up, but we might bounce around in these levels for a little while first to do some consolidation. So we might see another week or more of this up and down action before we start to retrace.
Yeah, for sure. Because if you look at the EMA on the weekly, we've got a lot of resistance above us to go up, right? But the bulls came in thick and fast and rejected this area. As soon as we got down to, down into 28, is it 28.6 or something like that, heavily rejected here, right? And a lot of buying happened. So when we go back into the 4 hourly, we got a V-shaped bounce, right? Actually, I don't know if you can see it on the 4 hourly as well as you can see it on the hourly, but we will do the hourly in just a minute to look up trade setups. Now, for the person who complained about my purple backgrounds, I hope you're happy because I've changed my backgrounds to black just for you, but not for me. These are my charts. And these are your charts, which was what some viewers had requested. So we are listening to you. We love you posting comments in there, even if it's very nice and kind, constructive criticism, because we're here for you to give you these tutorials and help you become better at trading and better at technical analysis. So if we look at what's been happening on the 4 hour, we are essentially trading within, I think it's between 41,000 and 30,000. Let's just call it 30,000, right? Here we go here. So if I draw my lines, I'm starting from scratch, right? We've got this support level here. Let me bring it down because whenever you do your support levels, you want as many candles touching as possible. You could do that and just see that we've had some fake outs, or we could do that, which kind of makes it a bit more sense here. So now we've got this bounce off here. We're going up, coming back down, and it looks like we've already posted a green candle. See how we close out on the 4 hourly here to show that we're about to reverse up and create a higher low, which is a trend reversal, right? That's potentially what could be happening. We'll have to see. We could come back down here and test this level here and could even come back down here and create a double bottom. But we don't know until it happens, right? Technical analysis is about probabilities and percentages of probabilities. It's not about predicting. And then you respond as we get the information in. So if we come down onto the 1 hour, it's a little bit more exciting because we do have a very clear trend reversal, if anybody can see that, with the head and shoulders there. And it looks like we've just breached the neckline. That should come there, right? We've just come under the neckline and now we're coming back up above it. So if you're looking to place a trade, you want to look for the RSI here towards the middle or down the bottom, which means we're a little bit oversold and it's time to start buying. So we've got all this momentum that could come all the way back up to push the price up above your entry level. And also with these candles here, you want to make sure that there's volume coming in. So technically, the best conservative trade would be to go, this is retesting it, and it's a bit of a fail of a retest, wouldn't you think? And then I would say put the trade in once we get above the 100-day moving average, because that could act as a rejection point as well. And ideally, you don't want to enter into a trade when you've got resistance above you. You want to be at the support levels. So if we are to look at what those support levels are, I have the Fibonacci's here. Here's one I made earlier. Oops, again, this is...
Just so you guys know, her charts don't look anything like this. Her charts have 10,000 lines on them. Yeah. So she cleaned them all up for you guys. We're working from a clean chart. I love it.
Oh, what is going on? Hang on. I had Pam come over and work my mouse. What is going on here?
It's not working. Try hitting escape. What happens?
No. I think I need to come here. I've got my brush on because look, I'm putting all of those yellow spots in there. Here we go.
Stars in the sky. That must mean we're going to the moon.
Cool. So let's go
Small
back to the
time
1 hour.
exercise. Thank you for your patience. We really appreciate your patience. If you don't have patience, you shouldn't be trading. So thank you for your patience. It's a good exercise, right?
Totally. Yeah. So here we are. Actually, no, let's go over to the 4 hour. Here, get 4 hours easier to see. I like zooming out so you can get the bigger picture of your trade. So here we go. Beautiful. Yeah, so we've got this golden Fibonacci at 43,683 based on swing high, swing low of the actual beginning of the bull run to the all-time high. So this is pretty significant. The golden ratio on the Fibonacci's fairly significant rejection points as well as support points. So that's what we want to be looking out for. Once we get above that level there, 43,600, maybe a bit more, 42,000 is what I think Carl from the Moon is saying. We could then say, yay, we're steering clear of those lower numbers and we're heading up, right? So let's have a look at this potential trade here. Feel free to ask any questions. I've got the Q&A over here so I can look at it. But that 4 hourly candle is getting bigger in the green, which is a really good sign. The issue that we've got though is that we've just fallen beyond the EMA, and we've got a lot of resistance above us on the 4 hour, and we've just fallen under it now on the 1 hour. So there's quite a bit of resistance. We need volume, we need momentum to push this back up above the neckline for this head and shoulders to play out. But we want to take it from the neckline to the top of the head, and we want to put it at the breakout, which is right here, for a target. And we are looking at 37951. Right, there we go. 37951 as your target. However, because we're breaking a Fibonacci level, we could very easily go up to the top of that sideways channel wedge that we've been in, which is at 39939. And if we break through that, we could go up to the golden pocket or the golden ratio here at 43 before getting a significant retracement back down. That's a possibility. So if you were putting in the trade, I would personally, if there's volume and all of a sudden, there's a whole lot of trading going on and it's pushing the price up really fast on the smaller time frames, you could trade the breakout like a clear green candle here. That's risky, but you could wait till you get above the breakout, the actual breakout top here when we broke out, and that's going to take us just above the 100 EMA. So that's going to take you to about 35,067 to be on the safe side, which doesn't actually make the risk to reward ratio on that trade worth it, but you'd be getting in early to ride it all the way up to the top. So you want to be very careful with your leverage. And I think this is probably a really good time for you to come in, Teresa, because we've said the higher the leverage you do does not mean you're going to make more money.
Yeah, I think that's...
You want to tell us why that is and how would you choose your leverage and yada, yada, yada.
Okay. Can you give me host controls so I can share my screen?
So
I really thought about, I created a slide deck for you guys just to make it easier to illustrate. And I really wanted to think about what I wanted to call my slide deck. So you guys can give me feedback on this. Let me just go into presentation mode here. Okay. Option one of what we call this as a video: why increasing leverage makes you less money, or why experienced traders lower their leverage. So feel free to give us comments in the comment section below after you've heard this explanation as to which you think of those is a better title when we cut out the snippet and make it a shorter video for you guys so it's easier for you to find. Now, I've already done a Bybit tutorial on the mechanics of placing a leverage trade. And in fact, from doing that tutorial, this is where some of these questions started coming up. People were saying, but how do I know how much leverage to use? What's a good and appropriate way to use risk management? So I'm not going to deal with the mechanics of how to place a leverage trade right now. We'll include the link to the Bybit tutorial down below so that if you need to understand how to place a trade, that's kind of the place to start. This is more about how to choose where you put your, or choose what amount of leverage you do, right? So let's talk about the mindset of this first, right? Because there are some false assumptions that if you've got them, you're probably losing money. The first would be higher leverage makes you more money, right? And I know you're going to say, Teresa, what? What are you talking about? Of course, higher leverage makes you more money. Well, by the end of me going through this slide deck, I hope that you understand, using this comparison, that higher leverage can make you more money in very specific scenarios. In many scenarios, it actually has you making less money, and I want you to understand why that is. The other thing is the exchange reports higher profit when I increase the leverage, therefore I must be making more money. If this is your assumption, that's a false assumption, and I'm going to explain that right now so that you understand why. Okay, I'm calling this one a tale of two trades, right? I'm going to show you two comparable trades so you understand this principle. Here's the assumptions of this trade just to make it easy for you to go along and do the math in your header. If you want to check my math, feel free to tell me if I've made any errors. I am dyslexic. So if I've made any errors, I'll come back and correct the slides. And that's one of the reasons I created a little cheat sheet spreadsheet for you guys that I'm going to put out in a future video, but I want to use it and test it for a while just to make sure there's no mistakes, because I realize when you make a mistake in a tool you put out to the public, that can have significant consequences for people in the trading world. So I never like to put anything out until I've been using it for a little while, to make sure there's no mistakes. And I actually request of you guys, if you ever find mistakes in my work, please put it in the comment field or reach out to us and let us know, because people might be losing money because of that. Okay, so we're going to assume the price of Bitcoin is $50,000. I chose 50,000, even though at the time of doing this video, we're in a bit of a slump and we've come down from that level. But 50,000 is an easy number to do the math from. And I'm going to use two equal trades, both $10,000. Again, using a $10,000 trade, really easy to do the math from. Okay, we're going to assume an average funding fee rate of 0.05% every 8 hours. Okay, that's generally an industry average if you go across different exchanges and at different time periods. That's a reasonable assumption to make, but funding fees do change, and it does depend on what exchange you're operating on. And we're also going to use the assumption that you leave the trade open for 24 hours. Now you can change these numbers to anything you want and do this example, but this is basically to just show you the difference between a high leverage trade and a low leverage trade. Okay, so we've got two trades. One trade is a 40x leverage trade. The other's a 2x leverage trade. So I took these extreme examples just because they're easy to do the math on. You have $10,000 in your account. So let's say you're trading on Bybit. The total amount of Bitcoin in your account equals $10,000 US, okay? Most traders always risk a consistent amount of their portfolio on every single trade. Okay. In fact, most seasoned traders recommend you risk 2.5% of your account every trade. Some go as high as 5%. But normally you would either do the same thing all the time or only go up to 5% or higher if it was a trade you were super confident on. For example, if you're breaking out of a multi-week pattern and every single indicator is bullish right now, then you might risk more. But in general, the way you do good risk management is you never change the amount you risk on every trade. That doesn't mean your trade size is the same every time, because you need to determine good risk management where your stop loss goes and how much leverage you're using. So let's talk about what that means. So let's say in this case, you were using a trade size of $10,000. Well, what do I mean by that? Well, you're going to have margin in each case, right? So in the case of the 40x leverage trade, your margin is only $250. So that means you're borrowing from the exchange $9,750. Sorry, I'm trying to do that math in my head because I didn't put a row for that. In this case, on a 2x leverage trade, your margin is $5,000, so significantly more margin. You're borrowing a lot less from the exchange. You're only borrowing $5,000 from the exchange, okay?
Teresa, can I stop you there just for the new guys?
Yeah.
When we say margin, we're meaning this is your money from your portfolio that you have invested in this, and the rest of that 10,000 is coming from borrowing it from the exchange.
Yeah, thank you. I appreciate that clarification. Okay, so in this case, and I don't recommend using the liquidation price as a stop loss, but there are traders who do this. They just say, well, it's easy to do the math, so I'm just going to let the trade liquidate instead of putting a stop loss in. Or they might put the stop loss 2 or 3 pips above the liquidation price, but this makes it really easy to do the math, right? So in other words, if the price in this case moves $5,000 up, in this case, if you did the math, you would make $1,000 on this trade, right? Now, interestingly, on this same trade, because it's a $10,000 trade, if the price moves $5,000, you're going to make the same $1,000. So the amount of leverage you used didn't affect the amount of money that you made on the trade, right? What's different about these two trades is the exchange is going to tell you in this case, you made 400% profit. And in this case, they'll tell you you made 50% profit. Well, why is that? Because the exchange is reporting the profit on what your margin was. So if you made $1,000 in this case, that was 4 times the amount of your margin. And so the exchange is going to report it as 400% profit. Is that clear, Nicola? Is that?
Yeah, I think, yeah.
In this case, the exchange is saying, well, actually, it's relative to this. Actually, my math might be wrong here. It actually should be 20% profit. Sorry, I think I've got an error on the slide because it's reporting it relative to the $5,000 that was your margin, right? So actually the profit here should be 20%. And I'll fix that on this slide later. And that's because they're reporting it relative to this number, right? But the amount of risk you took in both cases was still $250. So they're not reporting it relative to the risk you took. They're reporting it relative to your margin. So this is the way.
Can I just go over that again?
Yeah.
So where you've got the 400% profit versus that's supposed to be 20% profit.
Yeah.
That's relative to your margin, like your money, your hard-earned cash that you've got in there, right?
Correct.
So
I'm just going to fix that right now.
When you're leveraged higher, you've got higher leverage. That means you're borrowing more of the amount in the trade from the platform. You're not putting your own money in. Whereas the lower leverage, you're borrowing less and you're putting your own money in.
Correct.
Right?
Right. So in this case, because more of your money was in the trade, you borrowed less, but they're reporting your profit relative to this margin amount.
Right.
Okay. And so, of course, this seems a lot sexier than this, but at the end of the day, you've actually made the same amount of money on both these trades.
Yeah.
Okay. Here's where the difference is. In this trade, you paid $14.64 in funding fees using, just doing the math, the 0.05%. And in this case, you paid half the funding fees. Now, in the case that you're keeping a trade open for multiple days, that really starts to add up, especially if you're doing pattern trading or positional trading and you're keeping leverage trades open for a long period of time, right? So in this case, the actual profit you made relative to the $250 that you risked was 294%. So if you just take away the funding fees, like this is literally the amount of money you made on the $250, still a nice profit, right? You made 294%. In this case, you actually made 297% on the money you actually risked, right? Because you weren't risking $5,000, you were risking $250, because you used a stop loss that was at 5%. So the majority of the money you put into this trade was not at risk because your stop loss protected it.
So I think that deserves a like, at least, guys.
Yes. Okay.
That is incredible. And you know what, Teresa? I actually noticed this because when I started trading leverage at 3x, I noticed, wow, my portfolio was going up and up and up and up. And when I switched it up to 5x and 10x, I'm going, hey, I don't seem to be making as much money. In fact, it looks like I'm making less. How can this be? Because the percentages, as you said, they look very sexy, but the actual amount of coin that you're getting was less than what I was getting when I was trading 3x. And that's when, you know, like I had trebled my portfolio in a really short space of time on a 3x leverage.
Yeah. So really the only time you want to go into high leverage trades is when you've already got a trade open and you want to add more money to it because it's significantly in profit and there's a new pattern that's breaking out in addition to the one you've already traded, right? So you do see a lot of traders in the industry that scale up their trades, right? But you don't start out at the high leverage trade because the risk in getting into those trades is way too great. Then you're risking a lot more than 2.5% of your portfolio, right? So I'm actually working on, and I'll just give you a sneak peek of this, but I'm actually working on a little cheat sheet that will help you do the math, right? And the idea is, like you can see here, I have bolded trades. This is just a cheat sheet where you would plug in the price of Bitcoin and the current market price. And I've done versions for Ethereum and XRP, but you know, you could play with this and create your own versions. You can just copy this and play with it, right? But essentially, anything in the red we're not recommending because this would be, you know, using the highest leverage. If you're in the red boxes, you should move over to the lower leverage trades, right? And in fact, you can see here, if you can do the same trade at 2x leverage and the stop loss is in a reasonable position, then you should do the 2x leverage trade, not the 10x leverage trade. Well, what do I mean by that? Well, when you're looking at the charts, you're going to be looking at a pattern and say, you know, let's say this was a pattern that I was ready to trade. It really isn't at a point that I would be entering this trade, but let's say this was a downward trending wedge and I had the confirmation points and I could see from the VPVR that all the volume's here. So I might need a stop loss down here in order to place a long, right? And I'd also look at the Ichimoku cloud and say, well, for sure, I want my stop loss on the other side of the Ichimoku cloud. And then I'd probably pull up the EMA ribbon too, because it's a good idea in many cases to have your stop loss significantly across the EMA ribbon or across the next fib level, right? And we have another video Nicola and I did on where to choose your stop loss. So I'm not going to go into all that at detail, but there's different techniques on choosing your stop loss. I use the Ichimoku cloud predominantly, but I also use other things like VPVR to confirm whether I'm at the right place. But you choose the position of your stop loss, and then you'd go back over to this leverage cheat sheet and say, okay, well, I need a stop loss at $29,000 for this trade, but that's in the red. So let me see if I can find $29,000 here. Yep. Is 29,000 over here? Oh, almost, but not quite. So let me come back to this column. That's a 3x leverage trade. And based on the amount of money, this is just a fake number. I just used 10,000 for the purposes of this example. But we've got 29,000 here. So that means my margin's going to be 2,500 and I can do a $7,500 trade using a 10% stop loss, right? So, and I choose the leverage and the stop loss based on, and this is always using 2.5% risk, based on where I need to put my stop loss for that trade. Once you determine where your stop loss goes, you can also figure out, is this an effective trade? Yeah. Because if the target isn't at least 2 times beyond where the stop loss is, in other words, if the retracement is more than half of the profit you could take, that's not a good risk reward ratio. You wouldn't take that trade, right? But so using the stop loss to generate, go ahead.
I was going to say, you're going to do a whole tutorial on how to use this
Yeah.
when we release this to our subscribers, right? So
Yeah.
guys, if you want this chart and you think this could be really helpful to you, you need to click the like button.
Yeah. So leave us a comment if you want me to release this chart. Now, I'll be honest, I've been playing with this and experimenting, and I am a bit nervous because I'm vulnerably admitting I am a dyslexic, and sometimes I have errors in my work that go unnoticed. And I don't want to release this chart in a way and then find out 3 weeks later that I had a typo and someone lost money because of it.
Yeah, exactly.
Right? So what I'd love to do is if there's anybody out there that wants to test this spreadsheet for me and look to see if there's any errors and see what you think of it as a trading tool. I'd also like, if any of you do use it when I do put that tutorial out, please test trade, like paper trade with it, or use it on one of the test nets. Like Bybit and Phoenix, most of the big exchanges have test trading accounts you could do. Try it out with the test trading and see if it helps inform you. Because, as someone who's creating tools and advice for you guys, I'm really aware of the responsibility of that too. I want you to trade responsibly. And I wouldn't want our guidance to lead you down a path of placing a trade just because there was an error in something or you didn't understand how to use it effectively. But the main thing we want you to take away from this tutorial is lower leverage is better. Lower leverage makes you more money and it exposes you to less risk. Mm-hmm. And in the long run, you should always be seeking to be making the lowest leverage trade you can for your objective of the risk management profile that you're trading under. In other words, if you're always risking 2.5% of your account on every trade, which is my percentage, then you should be looking to use the lowest leverage possible for the trade you want to make, informed by the stop loss you're using.
Yeah.
So I've been using a rudimentary tool like this, but I'm trying to beef it up so you guys understand it.
Yeah, exactly. And we will go over and over it. I mean, this is the kind of stuff, guys, that we do release to our Crypto Ninjas, which is a VIP mastermind group we run 4 times a month. If you're interested to learn about that or join us in that, you can go down to the bottom and click on tradingcryptoninjas.com, find out all about our mastermind. And we've got quite a lot of charts that help you with your trading, as well as beginners to medium and advanced technical analysis training, how to trade, pattern trading, swing trading, and how to choose your strategy, how to spot trade, as well as the time we come together and we do trade alerts and signals in our Discord community, which is a nice little community. So details of that are below, and you need to subscribe so that you're going to get notified when we upload the video tutorial and we release that to the public. So to be clear, that's going to get released to all of you. Are going to get an opportunity to get your hands on that, whether you're part of our VIP mastermind group or not. It's just, if you're part of our mastermind, you get a lot more advanced training on it, and a lot more of those kind of spreadsheets to help you become more profitable. So I want to see more likes, guys. We've got more people watching than we've got likes. So, like, if you don't want that free stuff, which is like gold there, that could make you hundreds of thousands of dollars in the long run.
Give us the feedback if you want this. So if you want it, hit the like button. If not, we can always just release it to the Crypto Ninjas if you guys don't want this. So let us know. And actually, that's a great idea. We should get the Crypto Ninjas to test this out, actually, and give us feedback.
Yeah, we will. We'll get the ninjas to do it. Yeah. So let's talk about Ethereum, and then we'll talk about XRP. And I think we will be a little bit on mindset before we close off for the day. We've got a very nice, exciting thing to show you as well at the very end. So make sure you stay to the end. And I think we'll do it just before the storm breaks there, Teresa. Yeah. So Ethereum on the weekly, very similar to Bitcoin, has found support. This was just a wick down, right? And there just doesn't seem to be enough momentum or interest in the price going lower, despite all of the FUD that's out there about us going down to ridiculous levels that are below the top of the last bull run, which has never happened in the history of crypto. And I don't see any reason why that would happen now. We could go a little bit lower for sure, but I'm talking about, low prices like a 600, 700, even 800, Ethereum or 11,000, 18,000 Bitcoin. It's like, I mean, we're breaking history, and we haven't broken history in the history of crypto, so I don't see why we would do that now. So here we are with this really nice support level for Ethereum around 1687, which is quite low considering we were at 4,500 not so long ago. And now let me bring in the cavalry here. Dun, 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 dun. With our Fibonacci. And we can see where the golden ratio is. So we are looking at 28,346. So if we want to continue up to those higher prices, that's the level that we're going to need to break. When we niche down into the 1 hour, again, we have a reverse head and shoulders, which is a big trend reversal, generally speaking. We got this nice V-shaped bounce here. If we draw our level here, we've got to make sure that the head and the shoulders are touching. All the candles, the 2 candles for the heads, the 2 candles for each shoulder have got to be touching for this to be valid. Otherwise, it's not really a true head and shoulders. And this takes us above the 100-day moving average to 2,200, which is nice. And at the moment, like, Ethereum is looking a bit more bullish than Bitcoin, because all we've done with Ethereum is broken up, which is what we do. We've come back to test the previous resistant neckline as support, and we've bounced off of it, and we have a nice green candle there, right? So you could either trade at the next green candle with volume and with the RSI towards the bottom here. That's a little risky. So that would take you probably to about 1939 to enter. Or you could wait, which is better, to when we clear, the bottom of the candle clears where we last topped out when we actually did the breakout, which is around 2044. So once we get a candle above 2044, that would be a really good entry point. Now, what's really cool about Ethereum is that we are actually, let me go to my dirty charts. We're actually been in a descending channel, and let me just clean it up a little bit for you. Oops. There we go. So we see this descending channel here. So we come back up, right up above this level here. Remember, when you're entering along, you want to be above the support line. So actually this puts the entry to about 2055. So a little bit higher than what I had said. The good thing about what's happening here is that while the head and shoulders might be 2200 or 2195, depending on how you draw it, we're also breaking out of a descending channel, and the target for that is higher at 2278. So you could take profit at the lower amount, just depending on how much you were prepared to risk, or if we started to see resistance and a retrace, and then wait till we get up to the very top of this next level, which would be 2278. So that's really interesting that Ethereum, Teresa, is going to break out. Well, it's already showing a buy signal here, right? It's breaking out to the upside before Bitcoin. Bitcoin's lagging a little bit.
Yeah, sometimes they correlate, sometimes they move in opposite directions. So yeah. It's kind of fascinating to look what's going on right now.
Yeah. Now, here's the deal, guys. We've been talking about Mercury retrograde and how that often affects price action. And let me just delete these bits here so it's not so dirty. And Mercury went direct at 6 o'clock yesterday, and we saw the traditional retrace for a few hours, and then we saw it go up. Now, what usually happens just before direct is that we get flurry of action before we go direct. So it's almost kind of like it's preempting that we're not going backwards anymore, we're going forwards. And that's exactly what we got yesterday, right? Boom. 12 hours before direct, we got this big, nice push to the upside, came back down again, kept going back up. Now we're retracing a little bit. Looks like we're heading back up again and continuing to the upside. So I think between now 4 o'clock, I think, and 6 o'clock US Mountain Time, that's Denver time, we do see a little bit of a slowing down in the market because New York is closing and then Chicago closes, and then we get the opening of the APAC markets, and they usually are determined. Yesterday was lackluster. Look, this was the Asia market. Didn't seem very interested. And this was the European market here, still not interested in, like, I don't think people can believe we actually did this big bull run. I think everybody believed in the FUD that we're going lower, right? So we've had this extended period of consolidation, and then a little bit down here, this was the American market. And now as we come back up to close the American market, the Asia, APAC, Asia Pacific markets will be ultimately determining if we're going to continue to consolidate sideways, which the Ichimoku cloud shows.
We're newer to astrology on the call. Mercury going direct just basically means we're not in retrograde again anymore. There's now a clear line of sight to Mercury for us. So.
Yeah. Oh, look, Teresa, just while we've been talking, so the Ichimoku is showing that we could potentially trade sideways, maybe go back down and test these support lines down the bottom of the cloud.
Bullish. Look at that. We just flipped bullish. Yeah.
It just flipped. Well, we saw the warning it was going to flip bullish with the baseline and the conversion line crossing here. So when the conversion line is above the baseline, the conversion line's in the blue on my charts, and then green here, that is an indication that we're flipping bullish. Look at that. We got the green dot there, and then here we are, the cavalry. The cavalry's arriving, which is
maybe going bullish here.
Yeah,
I usually wait till we have more than one indicator on the Ichimoku, by the way, before I enter a trade. But that's a good sign that the price is coming back up.
Yeah, definitely. And this is really awesome. Whenever I see this, after I've seen like a sea of red for days and days and days, kind of feels like the Yankees are coming or the cavalry's coming or something.
The sun has come out from the clouds. Yay!
And we haven't got that in the Ethereum chart, although Ethereum, generally speaking, is a little bit more bullish but look, watch out for that. I'm using Cracking Cryptocurrency, the Ichimoku, which is the one that's got the settings for the cryptocurrency markets, not the stock market. So that's really
a great channel, by the way. We should include the link to them down below because they've got a lot of awesome indicators and really good stuff on their channel.
Yeah. Are they going to be speaking at our event?
Oh, we got to get them.
We got to get them. Yeah, we got to get them.
That would be awesome to have them speak at the Conscious Crypto event.
Yeah, going to be talking about our Conscious Crypto event that we're holding on Zoom. It's a 3-day conference where we're going to dive deep into conversations that can't be had on YouTube because of deplatforming, censorship, yada, yada, yada. So stay tuned. You're going to hear a bit more about that. But anyway, so yeah, with Ethereum, if you're not already in along, it's like Ichimoku is saying, buy now. But you could wait until we get through all of this resistance here in the Ichimoku cloud and get to above 2040 to ride it up here, or you could take the risk here. And then you just need to manage the risk and just watch for any reversals going there. But you've got your targets here, and talked about entry. Now let's look at XRP. Oh wow, XRP is coming back up. XRP has been in this downward trending channel. Actually, let me go to my new chart that I did just for you guys who don't like my purple and green backgrounds. This is the weekly we want to go to. And you'll see with XRP on the weekly, we've got a little bit of support, here and here. This is XRP looks like this. This is exactly what it does, right? And this is the first impulse that we've had. We've only literally had one impulse for Ethereum and for XRP, and we usually get three. And each one is higher than the next one. So, you know, I think XRP is looking good despite the SEC. I think everybody's going to have SEC fatigue. And when we go into the bull run, I think we will see some better prices here for XRP for sure. It is trading way under its actual market value because of the SEC lawsuit. So I'm thinking that we're going to be doing good. And look, we got supported. We wicked down here, but we got supported really nicely at 62.16, which is around about where we're trading at right now. So if we go to the 1 hour, yeah, 62.5. We've come down, look, lower lows. Now we've just posted a higher low and a higher low, signifying a little bit of a short-term trend reversal, right? So we are ripe for a trade here. Let's have a look at my charts because I've got everything in here. We had a W, boom, we met the W pattern. We had a flag pole, we met the flag. We met the flag target, which by wick, literally just wicked there, went above it actually. And then now we've got these this other flagpole target, but the biggest one I want to show you is this is also a descending wedge, and this is going to take us up to 83 cents. Right, we're going to come back through this pink line, which is the weekly average, and we're going to come all the way up to here, which is, oh no, it's 84.48. So we're coming up to the descending wedge. We've broken down from the bull flag instead of breaking up. And then we had a bear flag and we reached that target. Now we're coming back up really nice. As soon as we breach this line here, which is the resistance for the descending wedge, you are going to be able to place a trade in there if you've got volume. And let me see, let me do this. And the RSI's got plenty of room to move. So that's 64.81. Yeah, somewhere around there. 64.92 if you get a clear breakout with a lot of volume and it looks like it's taking off, because that's the thing with XRP. XRP doesn't often go up, come back down to retest, and then go back up again. It usually shoots up. So some trading XRP is a bit different from Bitcoin. Often you got to trade the breakout and just put in a
Bitcoin's the Wild West. Trade it XRP for a little while. It's really the Wild West.
It is the Wild West. Look,
yeah.
It is the Wild West, but then again, it isn't, because look how beautiful and predictable this has been. When it gets in, like XRP tends to trade in wedges, to upside, you know, descending, ascending, and sideways wedges. So that means that's good for scalpers, right? Ride it to the top with a long, short it to the bottom, long it to the top, short it to the bottom, right? Yeah. The only caveat on that is where whatever Bitcoin does, if Bitcoin ends up dropping substantially, it takes the whole market with it. And it doesn't matter what the charts look like. But that's a really good trade for XRP. And you could, you know, maybe take some profit at 68.83. I wouldn't. I think it's going to blast through that if we break that descending wedge. And then and ride it all the way up to the top of the wedge. And by then we might have another pattern. So it might be a trade where you just take profit here, leave half of the trade open to ride it up to $1.03, which is when our next major level of resistance is. I think we've got some resistance up at 93.95, but the major resistance is up at that $1.03, $1.05. So that's XRP for us. So thank you for your likes, for those of you who have just joined us and are new to our channel. We're all about teaching you technical analysis and good trade entries and good stop losses, talking about different strategies for trading to make you more profitable. We also do scenario trading, learning what kind of scenarios can affect price action, and we do mindset. So Teresa, just to finish up with, going back to your presentation on stop losses, that's going to require a mindset shift, is it not? So let's talk a little bit about that.
Yeah, that sounds great. Why don't you stop sharing your screen so we can have our lovely faces on?
I was drinking my kombucha, homemade kombucha.
Drinking kombucha. I love it. I'm on water today. You know, a lot of trading is mindset, right? And it's easy to get sucked into hype about something, right? Like we all watch our favorite YouTubers and we see them in 400% profit. And we don't think to ask, what leverage are you using? And you know, I'm only at 50% profit. Oh, he must be making more money because his screen is showing 400% profit. We never think to ask, but what was the leverage? Because maybe he's actually making the same amount of money I am, and I'm just thinking I'm not as good a trader because the exchange reports it that way, right?
Teresa,
So,
I
yeah.
can hardly hear you. I can hardly hear you because the rain's coming in. So why don't we just make it really quick and so
Okay.
that we can end?
So just notice that. Just notice that.
Okay, cool. So to end, because we have a storm here in Costa Rica and it gets really loud, we are going to be revealing something in just a second. But first of all, forgiveness. We need your forgiveness because the website for our Conscious Crypto event is not quite finished, but we wanted to show you the first part of it because it looks really hot. So there's mistakes and everything, so just forgive it. But Jeffrey, our YouTube project manager, has done an awesome job with the graphics, and I wanted to share it because tickets go on sale next week. And here it is. Ta-da! So this won't be here, and the title will be a bit different, so you can actually read it and you can hear it. But up here is the moon with the Bitcoin, and then the rocket ship, which is taking all the altcoins with it, with the man with his foot on the earth. So we wanted to show you that. Mark those dates in your diary, 1st, 2nd, and 3rd of October. And as I said, we will be releasing this next week for early bird ticket sales. So if you get in next week, you'll get an opportunity to get your ticket for a lot less than if you buy them the week after. So we just wanted to give you a heads up on that. Be sure that to subscribe, because when we go live, we will do a live stream to announce it and then talk to you a little bit about what's going on. It is a multi-speaker event. We have not confirmed all of the speakers, but I'm just going to give you a quick glance. You might have heard of Crypto, Da Vinci J. We're waiting on Ivan on Tech to get back to us. Carl from the Moon, Nomad Capitalist is looking like coming. Marzel Money is a definite yes. There's Jeroen Blockchain today, who's our mentor, is coming. And there are some other speakers in the pipeline as well. So we'll be having 1-hour workshops where we can really dive deep into conversations and strategies for trading, stuff that has not been spoken about on these guys' YouTube channels for some obvious reasons. And then we're going to have panels of experts talking about things pertaining to being profitable, as well as maximizing your profits and minimizing your taxes. So that's it from us today. Thanks so much. We would love your support by liking our live stream here. We live stream every Wednesday, and then we do some impromptu live streams. Plus, we're uploading a video every day of the working week and helping you with your technical analysis. So we would love your subscription and to join us to be part of the community. Anything else you want to say just to finish off with, Teresa?
Just make sure till next time that you trade consciously.
Trade consciously. Yeah. Bye, guys.
We'll see you next time, guys.